Broker IPTV.
Today we're talking with Doni Dolfinger, a reverse mortgage specialist with Universal Lending. And Doni, welcome to the show.
Well, thank you so much. Glad to be here.
In a previous segment, we have been talking a little bit about reverse mortgages, and we're continuing that. But again, for those not familiar with the term or what it is, can you explain it?
Certainly. A reverse mortgage is simply a loan against a borrower's home that does not have to be repaid as long as they live there. It's a loan without a mortgage payment.
Okay. Could they repay it if they wanted?
Absolutely, and many people will use a reverse mortgage with the intention of paying it back, and they can certainly make payments at any time without any penalty.
Someone might be saying to themselves, that sounds expensive, like it's going to cost me a high interest rate or something to that effect, or there's a lot of points up front, or is that true?
You know, they're a lot less expensive than they once were. Yes, in years past they were quite expensive, but we've done a lot to change that. In fact, there is a new program called a Home Equity Conversion Saver, or HECM Saver, and it's for people who would like to take less money up front but have less fees involved in the transaction. So it really helps people who are trying to preserve more equity for the estate.
All right, walk me through this. Let's say my mom did a reverse mortgage and she passed away. Right. And at the time she passed away, she owed $100,000 on the house, and maybe the house is worth $120,000. What happens?
You know, usually if my customer passes away, the same thing happens that it would happen on a normal transaction, even if they have just a traditional loan on the property. Usually they sell the house by calling a realtor, listing the home with the realtor will contact the title company orders the payoff, and at the settlement table the check is then issued to the seller for whatever remaining equity is available.
Okay. If they were underwater, what would happen?
FHA would pay the loss. So FHA is who's on the hook for the balance through the mortgage insurance. It's not taxpayers paying that loss if there is one. It's covered with the mortgage insurance. All
right, so now mom's getting some income in, and she's worried that it might affect her Social Security or it might affect her Medicare benefits. Right. She's worried about, is she going to get taxed on it? What happens there?
You know, reverse mortgage is not considered income by the government, so they're not taxed on it. We have customers who are on SSI, old age pension, even Medicaid that can qualify for this program. But if your mom is on Medicare and Social Security, they definitely don't have to worry about the funds from the reverse mortgage.
All right. So is there anything that mom's got to watch out for?
You know, I think this is such a regulated program. We have regulations not only on what we charge, but they have to go talk to a counselor to get it, to even obtain this type of a program or loan. So I think the primary thing I would watch out for is if there's someone who's trying to sell them a reverse mortgage and help them, quote unquote, invest the money, that might be a red flag.
Yeah. Last but not least, so somebody's saying, okay, this sounds good, this might be an option for me. How do they know if it's right for them?
First thing we're going to do is we're going to send them to an FHA counselor. We give them a list of counselors, and they can choose which one they prefer to go to. The counseling is just designed to help the consumer with the questions, to educate them of the pros and cons of the program so that they can make an educated decision.
Great information. Thanks so much for being here.
You're so welcome.
Appreciate it.
You bet.
Find more real estate videos at brokeriptv.com.